Welcome to Money Wire. This is Matt McCall. It is Friday, October 2nd, and it's early in the morning here, but there's some big news out already. President Trump, First Lady Melania, both have COVID. We'll talk about that, how it's affecting the markets here today, heading into the weekend. Big show in front of us. We have so much to talk about. I mean, the papers are overloading in front of me. We're going to take all your questions from Twitter that we got. We're going to name names of stocks. But again, what happens now that the president has COVID? How do we play this going forward? All coming up on MoneyLine.
The buck starts here. MoneyLine with Matt McCall.
All right, folks, again, this is Matt McCall. It is Friday, October 2nd. It is early. It's still around 7 a.m. East Coast time, and doing a little bit earlier this morning. And I'll be honest with you, I'm going to play golf for the first time this year with some of the copywriters here from work. So we're going to head out and enjoy. Hopefully it stops raining here in a few minutes. But I got in here early to get this done for you because I never want to miss a show. Another reason was I was up super early with the news that President Trump and First Lady Melania are both positive for COVID. Hope Hicks, one of his close advisors, tested positive earlier last night. And there was obviously speculation the president would get it because he's very close with her, and then, of course, his wife. So we'll see how this spreads throughout the White House. Everybody seems to be in good health from what we've seen so far. So the best to everybody out there, including everybody in the White House and anywhere in the world who has this, to continue to fight this and feel better as soon as possible and stay safe. But, you know, the markets right now, looking at them, are down. Again, this is still early in the morning, so a lot of things can change. The market's not opening for 2 hours here. But I'll give you updates on Twitter throughout the day as far as how this can affect the markets. But right now we have the S&P futures down about 1.6%. Dow futures down about 1.5%. NASDAQ down a little more, down 2.2%. But again, they tend to move a little more than the other stocks, a little bit more volatile. VIX is up about 10%. Looking at gold on this, you think gold will maybe be that bit of a safe haven. Gold slightly down on the news as well. We have the euro, US dollar about flat, so the dollar is not moving much. Oil obviously will fall on this, down over 4% to 37.07 last trade on crude. Reason for that is because then people are concerned about travel again. Will everybody stop traveling because the president has COVID? And you look at the airline stocks, Delta's down 4%. American Airlines is down that's actually Alcoa is down 1%. I put the wrong symbol in. Alcoa, that used to be an important company, down 1%. American Airlines down 4%. So the big airlines are all down, and it's likely going to see that. You're probably going to see the same thing happening in cruise lines as well. You'll see the cruise lines fall because, again, down Carnival Cruise down 5%. Listen, the way to play this is, again, I don't know what shakes out throughout the day, what other news comes out, and I'm not saying I'm buying on the open at 9:30 a.m. Eastern time here, but what I'm saying is I've been buying on pullbacks in the last couple of weeks. I continue to see great opportunity in the market right now, and this will likely knock down some stocks, and we'll talk about all kinds of stocks because I got a lot of questions from people on Twitter yesterday, but this is going to knock down stocks in general. Many of them that have no ties at all to COVID. Sure, they have ties to the economy, but no ties at all to COVID. And some may actually do better in this work-from-home environment, and you're seeing them get hit. As a matter of fact, let's take a look here at Zoom because we know Zoom is videos done very well with the work-from-home, down 1.4%. So that doesn't really make sense. What about Ring Central, which we have in our 2020 portfolio, which we're coming to the end of 2020, it's fourth quarter. I can't find a trade here pre-market on that. But, there's a lot of companies out there that, again, did well during the whole heyday of the coronavirus. Slack, which is symbol work, WORK, a work-from-home play, down 2.7%. How about Peloton? That's one we could probably take a look at and get a good idea of what's going on. PTON, Peloton, down 1.6%. So this is a mass just selling overall. I mean, not big selling, but it is a selling. I apologize. I told you it's early, so I'm going to have to drink my Dunkin' to get ready, play golf later. So what we're seeing here is just a pullback in markets. And if the President of the United States, I don't care who it is, he, she, doesn't matter, the market's going to be down on that news. I mean, let's be realistic, folks. And again, the fact that the S&P is now down 1.5, Dow down 1.4%, it's not that big of a deal. A lot of stocks, I mean, stocks weren't up big yesterday by any means, but some of our portfolios, some of our stocks had great days yesterday, start off the fourth quarter. So a little pullback's nothing. And if there's any stocks out there that you've been wanting to get into, now is probably a great buying opportunity. I had people texting me this morning, you must be concerned the market. And I was writing back, no, buying opportunity. 2 words, buying opportunity. All right, so that's where we stand right now. Could the markets pull back into the close because we don't know what happens over the weekend? Of course it could. I don't know. But I will say again, strong stocks be buying on pullbacks between now and the election. Actually, any time of the year, any year. But speaking of fourth quarter, I had Ryan Dietrich on Tuesday, LPL researcher. Guy's a genius when it comes to these numbers. But I pulled some of his charts he put out recently. And he looked at when you had a big third quarter. And for the S&P, anytime the S&P was up at least 7.5% in the third quarter, going back to 1950. And it's only happened about, I don't know how many times here. 1, 2, 3, 4, 5, 6. Well, I can't miss the count. 4, 6, 8, 10. This is the 12th time. So 11 times in the past. Every single time the S&P was up at least 7.5% in the third quarter. So a nice big gain in the third quarter. Every single time, all 11 times since 1950, the market was up. A median gain of 8.2%. 100% of the time. We were up 8.5% in the third quarter. What can that follow through? I mean, another 8.2%. We're sitting easily at all-time highs. What else does he have here? Fourth quarter is historically the best, going back to 1950. First quarter average 2.4%. Second quarter 1.8. Third quarter 0.6. We just got out of that third quarter and did pretty damn well in September. And then the fourth quarter 3.9. So dramatically higher than the rest. But what I really like about this is it shows the percentage of time that the quarter is higher. First quarter 64, second quarter 61, third quarter 61, fourth quarter 79%. So 8 out of 10 times on average 4%. So that's good news too. And then let's take a look at the S&P 500 quarterly returns, again, from 1950 through 2019. But this is based on the 4-year presidential election cycle. So in the fourth year, which we are in, again, the fourth quarter is typically the best. Not as good as it does typically, but up 2%, higher over 80% of the time. So again, I mean, these are just numbers, and you could say I'm putting a spin on things right now. Maybe I am because the market's down. I want you to feel happy going into the weekend. But these are real numbers, and typically the fourth quarter is a good time to be in the market. To me, I find the fourth quarter, and a lot of people say the summer's volatile, and it can be, but the fourth quarter, especially during election year, can be extremely volatile. So I expect a lot of volatility, and we'll talk about that because that was one of the questions I got coming up. All right, so we talked about the markets. We talked about the president and the first lady having COVID. Just so you know, the Prime Minister of UK had COVID. The President of Brazil also had COVID. Both recovered. Granted, Trump's 74, so I think Bolsonaro was about 60, is about 65 in Brazil. The PM over in UK is 56, 57. So a little bit older, yes. Maybe a little overweight too, but hopefully everybody's safe and good, and I'm sure he's got the best doctors in the world. So best wishes to anybody and everybody who has COVID or anything they're dealing with right now. All right, so I do want to talk about the debate very quick. I know this news is kind of overweighted debate. People asked about my thoughts on the debate. I don't even know where to begin. It is what it is. But what I will say is this, is I don't think anybody came out of that debate changing their minds in who they vote for, personally. We all know who Trump is now. He's been in office for over 3.5 years. Biden's been in D.C. for 47 years. I don't think we know too much about him, but he stays kind of quiet. But I think we pretty much know he's a lifelong politician. So he probably polar opposites. But I think most people have made their minds up already because this country's become so damn polarized to the left and right. I'm one of the few that actually kind of toes the middle of the line. I could sit there and I could debate anybody, and I could tell you I agree with you on some of the stuff Trump does, and I could tell you on the other 2 seconds later, I think some of the stuff he does is the most idiotic thing in the world. But that's most people in life. Nobody's perfect. So I could say the same thing about Biden. I think his tax plan is absolutely insane. I also can tell you that, I think he's probably got some good policy ideas that he could implement. So again, both ways it goes with me. So the debate was the debate. I think it was everything that we thought it was going to be. I went into it not taking it serious, and maybe that sounds horrible as an American, but I went into it with, realistic expectations that this was going to be a damn circus. And it was. It was a damn circus. I had friends and family tweeting me so angry. Shit, it's 10 o'clock at night. I'm usually asleep by now. I don't need to be getting angry. I won't sleep all night if my blood pressure's up. Let it go. You can't do anything yelling at the TV. It's like me yelling at the Eagles and how bad they're playing. I can't change the fact Carson Wentz stinks this year by yelling at the TV or getting my blood pressure up. It took me many years to figure that out. But now I enjoy the games. I enjoy watching television, and I don't get too worked up over it. Chalk it up to old age, whatever you want. You want to live long, you got to keep your stress level down, folks. So it is what it is. I mean, is there winners? I don't know. What does it mean for the markets? Market was up the next day. I don't think that means shit, though. I don't know. I don't know. As we get closer, I'll let you know what exactly I think. But I didn't take too much from it, put it that way. All right. A couple of things. A lot of people asked about PALANTIR, PLTR, the new big data secret company that went public this week. I was going to talk about it today, but there's a lot of other things I wanted to talk about. So I'm going to hold off on talking about that on Tuesday. I'll do more of a deep dive on that on Tuesday. The other thing is it's only been trading for 2 days. Today's the third day. So let's give it some time to trade, and let's go back to that. I do have a bunch of questions I'm going to get to for subscribers. One other thing I want to mention, 2 more SPACs priced this morning, Friday morning. Again, SPACs, Special Purpose Acquisition Corporation, also known as blank check companies. People come together, get money together, funnel it. Majority of the time, it comes out at $10 a share, a lot of times with warrants attached to it. And then at that time, the company then has 2 years to go out and use that money to buy typically a private company to merge it and to take it public. DRAFTKINGS has done that. There's been many companies out there have done it. Virgin Galactic has done that. Nikola, the electric vehicle company. So I can go on and on how many companies have done that. I mean, we've talked about a lot here in the show. 2 of them, though, that are interesting that priced this morning. One is a VG Acquisition Corp, symbols of VGAC. VG stands for Virgin Galactic. So this is basically Richard Branson's SPAC. So who knows what he's going to go after? They said they're going to go after something that's in Virgin's wheelhouse. So it's pretty wide open there, but that's an interesting one to keep an eye on. Another one that priced this morning it's called the Sports Entertainment Acquisition Corp. Symbols SEAH, SEAH, not the letter C. And that one's going after, obviously, as a sound, sports entertainment. I think professional sports and investing in sports is one of the greatest investments out there, and the average person can't really do that. There's not a lot of publicly traded professional sports teams out there either. A few, but not many. But I think there's probably a great buying opportunity right now with everything that's going with the sports leagues being shut down and then coming back with no fans. They've gotten absolutely demolished. You see this weekend, the Titans game against the Steelers has been postponed, I think, till week 8 because some of the Titans and players and personnel have COVID. So first time the NFL's had to shut down or postpone a game, shut things down. And it'll be interesting to see how this plays out. And we have college football. A lot of the leagues coming back in the next couple of weeks. We'll likely to see how that plays out. But I think there's a lot of great opportunity in sports and entertainment right now. So I would keep an eye on both of those. And, Richard Branson, obviously, you want to keep an eye on him as well. So those are 2. But let me ask you this. And again, don't forget to subscribe and like the podcast down below. But in the comments line down there, I'm thinking about putting together a SPAC portfolio. Probably limited shelf, only a couple of years. But what we'll do is we will tell you which SPACs to buy. Every week we'll come out with an update on the new SPACs, update on, like we just did right here, which SPAC's price. We'll also come out with any SPAC deals that have happened. For example, if a SPAC merges with a private company, give you our thoughts on that. May not be a buy at that point, but just give you our thoughts. And really could be your inside eyes and ears to the SPAC world. But most importantly, we'll tell you which SPACs to buy and build a SPAC portfolio. If that's something you're interested in, let me know in the comments below, because I'm trying to get this product rolling, and I think people will be very interested in it personally. But I want a little backup before I give my big pitch. So again, comment below if you'd be interested in a SPAC portfolio that my team and I would build for you. Do all of our research, and we'll tell you which SPACs are the best ones to buy. All right, so let's get to the questions from Twitter on here. There's quite a few, and they're all over the place. So let's just talk about them. A lot of questions about DraftKings, DKNG, which was a SPAC, and about William Hill. And so let's start with DraftKings first. You know, DraftKings DKNG is a symbol. The stock has had a hell of a run since a SPAC. The SPAC priced at 10, as I mentioned. And after the news of the SPAC merging with DraftKings, it rallied up to about $18, $19. So it was up about 80, 90%. But then it pulled all the way back down, believe it or not, back down into the $10 range. So it came all the way back. And a lot of times that's what you see with these SPACs. The original announcement goes up and then it pulls back because it takes months for that merger to actually take place. And then it rallies. So you could have got back in a high 10s, $11. We closed Thursday at $61.83. So at a new all-time high. So this stock has been on a damn tear. Believe it or not, I didn't realize it was this big until I did my research. It's a $21 billion company. Granted, it is a leader in fantasy sports in the United States. It had revenue last year of $323 million of 2019. By 2024, looking for $1.9 billion. They'll continue to lose money most likely in that entire time, next 4 years. But if we base it, we just look at, let's be positive here and say they come in with $2.1 billion in revenue in 2024, a little bit higher than a 1.9, 10% higher. It still trades at 10 times sales, 10 times 2024 sales today. So it is an extremely, extremely pricey company at this level. So I don't know if I buy it here. I definitely don't chase it at 61 and change. That's definitely something I'm not going to do. I have no exposure to this company at all through anything at this point. I would tell you if I did. It is down pre-market, down to 59, so it's down about 4.5%. As you imagine, everything's down, especially with the Tennessee Titans game being postponed. So you are seeing quite a few stocks down. You're seeing a lot of these types of companies do really well, sports gambling and everything. Wave to the maintenance lady behind us wiping down. See, they were keeping clean. See how she wiped off the door handle for me? Great lady. Used to work for the United States Postal Service in St. Louis. Now she works here. So anyway, DraftKings I'd stay away from. I wouldn't look at it here. Again, I love the company, love the long term, just valuation-wise, a little too high for me at this point. The other question is for William Hill, WIMHY. UK-based company. This is in our sports betting, sports gambling portfolio and investment opportunities, which you can go to McCall.moneywire.com, not MoneyLine, McCall.moneywire.com. Get all of our free articles, my team and myself write. You could get investment opportunities for as low as $99 a year. Get all the portfolios for $99 a year, folks. It's a freaking steal. So William Hill spiked just on last Friday. It spiked because there was rumors that Caesars Entertainment, which is symbol CZR, was going to be buying it. And it looks like the deal eventually is going to go through. Looks like they bought it for about $3.73 billion. It's about $14.20 a share for the ADR. That's the one that trades here in the United States. Like I said, it's a UK-based sports betting company. To me, it looks like it's going to be the final offer. We haven't put out a sell yet, but it looks like it's going to be the final offer. I think Caesars is getting this damn company for a song. I think it's worth so much more than what this is right now. I mean, think about this. DraftKings is a $21 billion company. William Hill's being bought for $3.73 billion, folks. I mean, $3.73 billion. I mean, that's a big damn difference. And let's take a look at some of the numbers and compare this. I should have done this last night, but I did not. And just look at the difference of the numbers here. So William Hill, if I look at the revenue, so Last year, 1.5 billion pounds. Of course, I don't know what that is to US dollars, but I'll find out in a second. 1.5 billion pounds is about almost 2 billion US dollars. I just mentioned to you, this was last year, that DraftKings at 323 and they're going up to 2 billion in 2024. So this is already at 2 billion. Looking like, it doesn't have the same growth, but there's definitely huge growth potential. It is already making money where, again, DraftKings probably won't make money for the next 4 years. And William Hill has so many deals with different casinos all around the country running sports books. I mean, they are a big name. They are one of the biggest names over in the UK. The problem is the UK business has been in trouble for a couple of years. So you're seeing some issues there. So William Hill looks like it's going to be bought out at $14.20. It closed yesterday at $14.19. So it's going to be time to sell. Just take the offer. I mean, you're going to hold if you want, but it doesn't look like it's going any higher than this. So, sell. And keep in mind that in March, William Hill was down as low as $1.38. So now it's getting bought at $14.20. So you can look at it that way, that it's being bought by 9 times what it was. Damn, I still think this is a $20 stock. I do. I think they're getting it for a song. So that shifts over to Caesars. Is Caesars a nice play here? Caesars definitely could, because now they have exposure to everything that William Hill has here in the United States. And I got to tell you, so maybe Caesars is the way to go. Caesars revenue last year about 2.5 billion. By 2024, looking at over 11 billion, folks. And this is a 9.6 billion company. Again, just compare this to DraftKings and what's going on there. And look at the future growth, should be back. It's going to be losing some money this year, next year, likely to toward the COVID, but probably back to making $3 to $4 a share in a couple of years. Man, I got to tell you, maybe Caesars is a nice way to go. All that being said, we have several other stocks already in our sports gambling portfolio that I love. So if you're not yet an Investment Opportunities member, McCallMoneyWire.com, check it out. It's, again, $99 for the year. You have exposure to that portfolio, the 5G portfolio, AI portfolio, cannabis portfolio. I mean, you name it. There's so much, and a monthly issue. We just put out yesterday, Thursday after the bell, a brand new monthly issue. And I might as well jump into one of the questions. Somebody asked about this in one of the questions. Is clean energy and solar. We just put out our very first solar basket, our solar portfolio, 4 stocks in there. We just put it out, folks, last night. So if you want to get a hold of that, please do it. And I will say, I am probably the last person to convert to the whole green, clean energy thing. I mean, I recycle. I do all the stuff I'm supposed to, but I'm not a tree hugger or anything like that. I don't, as far as climate change, I don't know. Do I agree putting all this stuff in the air does something? Absolutely. You have to be an idiot not to think that. But as far as the temperatures being different now than they were 100 years ago, I don't know. I don't have the facts, so I can't comment on it. So I have no clue. I have no insight, and I have no opinion on that. You ask anybody who knows me, for me not to have an opinion on something is pretty damn rare. So I have no opinion on it. That being said, I do look at numbers, and I do look at where the future is going to go. And I know that solar makes up about 2% of the energy that's generated right now in the United States. And I do know that during the roaring 2020s, in the next 10 years, right, that we're going to see, likely 5x, if not more. So I see dollar signs. That's all I see. I see opportunity in clean energy, solar. Wind is very overlooked. I think there's a great opportunity in wind as well. We have a stock in the portfolio that is a wind play. So I love that, man. That company's really come back and looking really good. But when it comes to solar, we put 4 stocks in there. One really big name, which you might be surprised when I put in my price target on it, it's probably the highest in the street. 2 mid caps, and then 1 very, very tiny nano cap, which typically I don't do in Investment Opportunities. I save that for early stage investor, for my little bit more exclusive newsletter. But I decided to do this. So everybody out there is a subscriber. You know this is not the norm. You know it's a very small company. Use limit prices. But man, I got to tell you, there's something about this company. If I didn't put it out, I would have put my own money in it. You know, I don't buy what I put out in newsletter, but I would have put my own money in. I'll tell you that much. That's all I have to say about it. So if you don't have that stock yet, please check out the portfolio. And again, McCallMoneyWire.com, and it's actually down pre-market 1.4%, that tiny one I'm talking about, which is a great buying opportunity to get in right now. So damn, get out there and do that. But people were asking about EVs and solar because clean energy was brought up during the debate. And I don't remember, but somebody on Twitter said that Biden said all federal vehicles will be going to EVs, electric vehicles, at some point in the future. Yeah, I mean, I don't know, it's 1 year, 10 year, 50 years. That will happen, I agree. And then people ask about Workhorse, which is a stock that, of course, we have in a portfolio, which we originally recommended at $2.74, folks. Closed at $25.08 on Thursday. And at one point in time was 1,000% gain, over 30% just a couple weeks ago. I'll take a bow, and you're welcome. But Workhorse, WKHS, my thesis when we put this in, before the whole EV thing took off, I think it was May 1st we put it out during COVID. I've been watching Workhorse for a long time. They're up for the bid for the United States Postal Service, USPS, contract for new vehicles. If you don't know this already, those Grummins that you see driving around right now with the sliding door on the opposite side, they're so old. They should have been retired, most of them 10 to 15 years ago. They're so old they can't find parts. They're so old they can't find mechanics to work on them. They're the most inefficient vehicles on the road. So the U.S. Postal Service has put in taking bids for up to $6.5 billion in new vehicles. It keeps getting delayed, of course, because the government sucks and they can't get anything right. It should have been already out. They're saying October when they're going to give out the bids. But my thesis was when I put out Workhorse was about a $250 or so million company, that if they even got a portion, they may split this up, a portion. Imagine a $250 million company getting even $1 billion contract, 1/6 of it. That is huge. It's now a much bigger company, obviously. Workhorse is now about a $2 billion company. I still think that they have a great chance of getting a portion of that. And if they do, the stock erupts. I still think it's a $50 stock. Again, this could be easily a 20 bagger for us, if not more in the years ahead. We did sell some along the way because we like to bank profits for our subscribers. So that being said, boy, it's tough to say, even though I think it was much higher, maybe buy on weakness in the low 20s at 25. I'm sure it's going to be down today with everything else that's going on in the market. Let me see if I get a quote on it this morning for you. But it looks like it's most likely going to be down. And yeah, it's down to 23.50, down 6.5%. So yeah, maybe down here you dabble a little if you're looking to get in for the first time. Just know that we originally recommended it at $2.74. So you're paying much more than what we originally got in on. But that is my view on EVs. I think electric vehicles are the future. I've been in the future transportation investment area for over 2 years now. Our portfolios are crushing it in both of those. We have one in investment opportunities and we have one in early stage investor, both doing very, very well. And that's the great thing about this is investment opportunities is a little bit of bigger companies. And then early stage investors are going to be a little bit of smaller ones. But, the future of transportation and investment opportunities are front end, $99. Our solid state battery portfolio is up 93%. Our transportation 2.0 portfolio is up 50%. So now let's take a look at early stage investor, which is, again, it's smaller, a little more aggressive companies. It's a little bit higher priced, obviously, and we kind of keep this to, our best subscribers out there. And I'm going to thank everybody who is a subscriber, but just looking at some of the returns here that we have on it. Our transportation 2.0 portfolio is up just under 100%. So you could just see, how well it's done. And one thing I do want to point out, every once in a while we see great opportunities in the market. On April 1st, right after the market bottom, I said, man, we got to get out there because there's such opportunities. So we called it our crisis and opportunity portfolio. Our crisis and opportunity portfolio, since we started April 1st, we put out a couple stocks and we added a few throughout April, and actually as far as into June is up on average 127.5% coming into today. Unbelievable. The MICROCAP Millionaire Portfolio we put out February 5th, 2 weeks before the top, before COVID. I had no idea this was going to happen. Since that time, the MICROCAP index is down over 10%. This basket we put out is up over 45%. So beating market by 55%, being its benchmark. I'm telling you, if I was a hedge fund manager, I would be all over the cover of everything. Screw Bill Ackman and Gunlack and all these guys. I mean, we're making money here. It's unbelievable. And again, I hate to toot my own horn, but sometimes you have to. And you can just see it makes me happy. I want my subscribers to make money. People always ask, why do you do this? Well, if I do well for you, you sign up for more newsletters, I make more money. It's a freaking win. It's the best business in the world. If I'm good at my job, I essentially make more money. And that's how jobs should be, in my opinion. If you run a great restaurant with good service and you're a great chef, you take care of your patrons, you're going to have more patrons, you're going to make more money. I have a fitness studio. If my instructors do well, we teach a good class, we keep it clean, we take care of our patrons, what happens? Business is good. We all make more money. I'm going to piss people off here, but that's kind of capitalism, folks. So I back it. Coming from a low middle class family with a ton of kids, fighting for food, wearing McGregors when I played sports, not Nikes, not Adidas, not Converse, freaking McGregors. They're made out of plastic from the 5 and dime. You can make it, but you have to work hard. Enjoy what you do. Be passionate. Don't fake the passion because nobody's going to believe your shit. Be passionate about what you do and enjoy it. Sorry, that was like a random rant. All right, let's get back to these questions. I'm going off here, and I got a golf game to get to. I have to warm up, stretch. At my age, you got to stretch the back out a little bit. It's so funny because I never wear golf shirts, and this is a shirt I have on here. I think I don't know if you can see from the Breakers. It's the first time I wore it. I was at the Breakers right when Stansberry bought us. Stansberry Research at the first meeting in the Breakers. We had a big meeting down there, and this was on my bed when I came in. And I thought to myself, I don't wear golf shirts. I'm not that kind of guy. I'm a T-shirt kind of guy. But I pulled it out of the closet this morning. I'm like, wow, I can actually wear this and go play golf. And it's actually a pretty nice T-shirt or a pretty nice shirt. First time wearing it in like 2 years. So let's see what else. Quick question here. If somebody asks, what about the price to sales ratio? You talk about the PE ratio, price to earnings ratio. What does that really mean? How do you look at it? Well, a few things here. I can go on and on about this, but a lot of small cap stocks that we look at, especially early stage investor, revolutionary, innovative companies, especially tech companies, they don't have earnings yet. They may create growth on the top line, which means revenue and sales, but they put that back in their company, so they're not generating a profit. That was Amazon for years. I remember all the people in CNBCs and everybody else whacking Amazon. They'll never make a profit. Jeff Bezos is an idiot. He keeps spending all his money. Well, boy, they look kind of stupid now, don't they? I remember recommending Amazon on Fox Business way back in the day and saying, no, you guys are wrong. I mean, it doesn't matter if you're making a profit yet. I mean, look at the sales. They're taking market share. That's what that's what a smart small company does. So when it comes to small companies, I like to look at price to sales. It just shows, how many times more the company's worth versus how much they bring in annual sales. So if the company's a $1 billion company and it does $200 million in annual sales, $1 billion over $200 million is 5 to 1 price to sales. Then you have the PE ratio, price to earnings. If there's no earnings, you have 0. So a lot of these small companies don't have it. But what I always talk about, one of my rules for looking for early stage investment opportunities is a path to profitability. That means they may not be making money now, but I need to see a path because eventually you need to make money. So if there's no path to profitability, you're not going to get into my portfolio. So that's important to look at that path to profitability. And keep in mind, some sectors are different than others. Software companies, even software companies that are making money, trade at ridiculously high ratios right now because the growth is so high and they give them higher multiples. Some price of sales 20, 25. The market's around 2 and change. So it depends on the sector. So I hate to give it a blanket statement, but it depends on the sector. And if you're a subscriber of mine, you see I usually break it down and compare that for you. 2 more questions and I'll wrap it up. One, somebody asked about small cap biotech stocks. So I looked at some performances here. They just launched, believe it or not, the NASDAQ launched on April 30th, a brand new index called the NASDAQ Junior Biotech Index. And what they do is they take the NASDAQ Biotech Index, which is tracked by the IBB. It's an ETF. So IBB has had a pretty good year. It's pulled back recently, but IBB is the NASDAQ Biotech Index. They take that, they start with that, and they take all the companies that have a $5 billion valuation and lower. That's what they consider a junior biotech. 5 billion market cap and lower. Market valuation, market cap, same thing, and lower. That's about 177 stocks that are in that right now. 2/3 of that portfolio range between 1 billion and 5 billion. Some a little bit smaller, but they can't be smaller than 200 million. However, there is now an ETF that tracks that as well. And the symbol is IBBJ, junior after it. And that's the Defiance NASDAQ Junior Biotech ETF. Very, very interesting ETF. I'm not a big fan of ETFs because I think you build your own portfolio. And this one has 177 stocks in it. I don't like 177 biotechs. It's just too many. Its top holding is IMMU, which has been bought out recently, so that's why it's in there. IMMUNOMEDICS. It makes up 6.4% of the portfolio. So I looked at the top holdings. IMMUNOMEDICS, and second one is MRTX, makes about 2.4%. Mirati Therapeutics. We have Excel in there, EXEL, which is Excellius, which is another biotech, obviously. Myocardia, MYOK, and so on. And all of them had market caps well above 5 billion. Because what happens is they launch this in April, and then at the end of every quarter, if anything's more than 5%, they knock it down. And then at the end of every year in December, they reshuffle, reallocate the portfolio, and at that point they reconstitute it. So if there's anything that's above 5 billion, it's wiped out. You have to go back to take that NASDAQ index and take them out. So a lot of these companies will be taken out of the portfolio, and a lot of smaller ones or new ones that are entered or ones that have pulled back will then be added to the index. So it's only reconstituted every December where we have ones coming in and coming out, but it's reallocated every quarter. Very interesting, something to keep an eye on, but that is done pretty darn well. And if I take a look, since that index was launched on 4/30, heading into today, Friday, the NASDAQ Junior Biotech Index is up about 16.8% since the 30th of April. S&P's up 16, so beating it slightly. The NASDAQ Biotech Index is only up 10.2 in that time frame. However, there's one ETF that's similar to that that's killing it, and this is the ARKG Genomics ETF, up 59.5% in the same time frame. So you can see, where there's a lot of opportunity here in the genomics part of this. But I love biotech. I love the junior biotechs as well. So it's something to keep an eye on. And many of you know this is not only the year of biotech, but it is the decade of biotech and future of healthcare. I'm telling you, revolutionary things are happening. One more question I'm going to take here, and this is kind of a general one. I think it's important. The question is, do we buy on every dip or wait until the election is over? Similar question is, do we buy the recovery plays now or wait until a vaccine, or do we avoid them completely? Well, I'll tell you this. I don't know how many dips we have between now and the election. I don't know what happens between now and the election. I don't know what happens after the election. I don't even know who wins the damn election. Nobody does. I will say this. I believe we're going to have a lot of volatility between now and the election, probably right after, because it's probably going to be contested, but we all know that for at least a little while. We're going to have volatility. We're going to have very good companies that, regardless who wins the presidency, will do well 1, 3, 5, 10 years from now. I don't know if that next pullback is the lowest it's ever going to go. It might have a deeper pullback before the election, after the election. I do know I will use all pullbacks to buy into very good long-term companies that fit into my trends. Future of transportation, future of healthcare, artificial intelligence, Internet of Things, 5G, you name it, on and on. I do know that. My best guess is, again, we have volatility, ups and downs, a couple pullbacks before we get to the election. After the election, likely crazy volatility for a few days, if not a few weeks, depending on what the results are. And then from there, once we settle down, take a deep breath, we'll probably see one of the greatest buying opportunities we're going to see for years right after the election, any pullback. And then from there, I think we have a great 2021. Earnings getting better, things settle down. Whoever wins the presidency is going to spend like a drunken sailor. Either one of them. We're going to see interest rates remain low. We're going to see the housing market remain robust. We're going to see jobs come back. We're going to see a vaccine. A lot of good things setting up. We have the checkable deposits in the United States at the highest level ever. We have the savings account in the United States at the highest level ever. We have net worth of individuals and nonprofits at the highest level ever. Things are good. I don't care what the hell the media wants to tell you and scare you, and they're going to scare the hell out of you today. Long-term things are good. Use these pullbacks as buying opportunities. So do I know if this is the best pullback to buy? I don't know, I'll be honest with you. But as a long-term investor, I have a watch list of nearly 300 stocks. And when I see the strongest ones come back 5, 10, 15, 20%, whatever it might be to support, and I think the market's at a support area as well, we're getting in and we're buying long-term stocks. All right, thank you so much, everybody. Wish me well. I got to stretch and get out there and play the golf game. I got to beat all these youngins out there. But I will be back in the office this afternoon. So as I watch the markets, you'll get an update if anything comes out on my Twitter. But thank you so much for watching. Check us out at Matthew McCall on Twitter. Like, subscribe, comment. Again, if you're interested in a SPAC portfolio, let me know. Again, it's October 2nd, 2020. The President and First Lady have COVID. Best of luck to them and everybody else in the world who's dealing with anything like that right now. Go out and give somebody a hug, and maybe put a face mask on when you do it. I don't know. Fist bump them, whatever it is. But have a lovely, safe, happy weekend. I'll be back Tuesday. I'm Matt McCall. And again,
Thanks for listening to MoneyLine with Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.